What's good? What's good? It's your man Don Bucks. Welcome to another episode of Cheef and Chart, sponsored by Rapping Dough. You know the home of money conversations. We talk all things black wealth. But this particular series, we talk options, we talk charts, right? What we see on these Jones, because a lot of people get hung up on them, and here we simplify them. We put it in plain English. You feel me? So before I get into that, make sure you hit the like, subscribe, and notification bell for when your boy go live, man. This is episode Tropical Runtz. Tastes pretty good too. But listen, man, shout out to that reel I put out yesterday with Dr. Umar. That John is getting heavy spins. You hear me? And basically, he's talking about how, it's the same stuff I've been talking about for years. Now, let me preface this. I like nice shit too. Right? We all like nice things. But it's like, we have to be strategic about it. We have to be intelligent about it. Like, I know y'all probably heard the saying, use your assets to pay for your liabilities. That's basically the gist of what we're trying to tell people to do, right? There's a way to get the nice things. So he was going through basically how much we spend on different things and why we do it. And he was basically saying that we feel worthless and defeated. So in order to make ourselves feel worth something, we feel as though it has to be the clothes that make us worth something. To the degree where we're lacking all the necessary things to create a community, our own hospitals, our own schools, our own banks. And it was one more thing. So that thing going crazy, but it's real spill. It's real spill. We got to get a handle on our spending. You know what I'm saying? Like buying shit because we trying to make other people that's as broke, if not broker than us, think we got something. Like we gotta get away from that shit. You know what I mean? If you was tapped in yesterday, y'all know we still on the downtrend, and we had some downward momentum on the MACD. And y'all know I use the MACD as something to help me see what I see or confirm what I see. So on this daily chart, we see here this green bar from yesterday, but we also see weakness in the in the MACD. What this says is don't buy this pullback, right? Because momentum is to the downside. So this green bar, we should not be getting excited off of this because people would be psyched out to hop in here. But because after it came down, they see this green bar, they're like, okay, it must have stopped. But if you look down here, you see this momentum that's to the downside, excuse me. You would know to not buy this strength. There's strength in the bar, but there's weakness in the momentum. So as you can see what happened the next day, it went down. So that's what we talked about yesterday, but I also talked about the Options Made Easy Bootcamp. So if you haven't registered yet, it's hosted by myself and my coach, Todd Capital, starting Sunday. So it's 4 weeks, 1.5 sessions, 1.5 hour each week. General admission, and you have VIP. General admission and VIP. Everybody get lifetime access to the Intro to Swing Trading course and all of its updates. But VIP also get extra half an hour of Q&A, as well as a workbook. If you guys if I can get this on camera. It's not bringing it up, but it's I got a workbook here. There you go. So they get a workbook as well as an extra half an hour Q&A. But yeah, that starts Sunday. So limited seating, might actually get your seat today. Get your seat today. So the courses alone are thousands of dollars. We ain't even talking about the workbook and our time. That's thousands of dollars worth of value. So general admission get all of that for $197. And VIP get that for $247. All right, so just a heads up, feel free to go grab that in the about section of this channel. But back to these charts. So of course we want to go down to a trading time frame, but this is what the daily is showing us. So my trading time frame is a 2 hour. So as you can see yesterday, boom, we had somebody would have bought this this bounce right here. But why? When you look down here, you don't see no new high in the MACD. So no, I'm not buying this. I would do puts. I would let it rally for a put because it's on a downtrend. So when we're on a downtrend, this is a nugget for you. The down draws are bigger than the upswings in a downtrend, right? So I would wait for one of those short upswings so I can position for one of those big downswings because we're on a downtrend, right? So that's what I would have been setting up for here. If I was playing the SPY, I would have been waiting for it to bounce on some goofy shit. Bounce for no reason because look, weakness, strength. It's bouncing for no reason. And plus what it says on the daily, which holds more weight than the 2 hour. What does it say? Weakness, right? So I'm not buying this in the trading time frame. I'm not buying that because I see what it says on the daily. It's making sense. You start putting the pieces together. So we see what the longer time frame say, the daily, that holds more weight than the 2 hour. It's a longer time frame. So the longer time frame holds more weight than the one under it. So the daily says weakness. So why would I be buying this? I'll be waiting for one of these so I can do a put, right? I see that weakness on the daily. I'm gonna go down to my trading time frame and see if I see some goofy. So boom, here we go. Here go the goofy. Why is this bouncing like this? Oh, because it hit a support. Okay. But there's no strength there because the daily said weakness. So I'll be waiting for it to do one of these and do a put right here. Boom. Right. And of course, how would you know when it's about to drop? You go down to your relatable for 30 minutes. Right. And you see it crossed down right here. It's running out of steam. It's bending over. It's rolling over. So on the rollover, that means it's running out of steam. It's rolling over. It hit a resistance area. It broke through it. But the daily said weakness, right? Excuse me. So I'm waiting for it to show me not a lot of conviction. And this is what this is showing me. Yes, it broke through, but it broke through and came back down in it. It's kind of like playing around with it. Now, if you know anything about levels, you know that price don't want to be at a level. So it's either, if it broke, it's supposed to continue up immediately, not play around at the level. So if it breaks and finagles around at it, it's a weak break. On top of all the other ingredients that we got, weakness in the daily. So we add all that stuff up and then we see what we see. We like, this plus this equals this, or high probabilities of it equaling that. And lo and behold, look what happened. Boom. A put from 401 all the way down to 392. You know how much money that is? You've been playing the SPY and knowing what I just told you. So this is my stock, SPXS. Been playing this for the past couple of days. I switched to it. So Where were we today? So yesterday, well, day before, I did a call here, took profit here, waited for it to drop so I can get back in. And I shouldn't have got in right here, but I did because it broke the level and it came right back down in it. I thought it was going to bounce on this pin bar right here, but it didn't. So this is where I got in for a call. Yeah, got in for a call, and then today it didn't go. It didn't go. My strike price is 23.50. So today it did this, bounced. I seen it bouncing off this level. It's not drawn here, but it's bouncing off this level. I bought another contract. I averaged in. So now the contracts are cheaper than when I bought one up here. So the price that I bought it up here plus the price I bought it here makes the price of my overall price cheaper than my original buy-in. So now I can reach profits sooner because my contracts are cheaper. That makes sense. So when it bounced today, I got 15 days on the contract or something like that. Because if y'all are not familiar with Labor Day, we're closed. The market is closed Monday. All right, so this is a long weekend. So I got extra time on the contract. So what happened was it came all the way back up to where I got in at today. So I got happy as shit. Like, oh, okay, I averaged in and it worked to my favor because I seen it bouncing off this level and the momentum turning up. I was like, yeah, let's go. So yeah, it hit this level, but it bust through. So it's holding right here. My edge says it's going to bust through next week and go to my 23.50 because 23.50 is right there. Where is it? Let me shrink it. 23.50 is right here. So it's not even that far away. But what I seen is this on the daily. I'm shooting for this strike price here. 24, about 24. But I got a 23.50 strike price. I came a little bit further down because I'm not going to take this all the way to 24. I'm going to take profit before that because you got to realize at levels, you're not the only person that's looking at that level. So there's a lot of volatility, a lot of decisions being made at levels. So you want to take profit before the level, right? So I'm happy with this trade right now. We got this strength in the MACD. You see this weakness, but we have strength. That's why the next bar is bullish, because that's what that means. This is a momentum divergence. You see weakness in a bar, but down here in the MACD, the momentum is showing up. You need to be buying this weakness. Okay. Same here. A new high in the MACD in comparison to back here, it's a slightly higher high. Well, a new high, right? It's microscopic, but I see it. It's a new high in the MACD. You scroll up, you see a weak bar. New high, weak bar, you see the result. So same thing here. Weak bar, strength in the MACD. This is going. This is going. It may go to 27, but I'm going to play it how I play it. And that's, A couple days out, I might take profit. Then I reposition when I see my edge. But my initial play called for 24 being the target. So that's why I got the 23.50. 15 days out. So I'm giving it 7-8 days max to get there. You dig? That's all I got, y'all. So this is how we plan it. If you want to learn how to swing trade options, hit the description. But make sure if you want live training, because we doing it live. People like courses, but I found that doing it live gives it a little bit of extra razzle dazzle. So Options Made Easy Bootcamp starting Sunday. Get your seat today. All right. So with that being said, if you register, I'll see you Sunday. If not, I'll see you Monday on the next episode. So make sure you hit the like and subscribe button and the notification bell so y'all know when I'm going live. That being said, always remember, ain't no competition. You versus you. See y'all Monday.